Congratulations, you've made it all the way to preparing a trial balance. The trial balance then leads to creating our adjusting journal entries, the adjusted trial balance, the financial statements, closing entries, and the post-closing trial balance, which are all future chapters. You're almost there with this one. So the trial balance. This is an integral part of the accounting process. It is a list of accounts and their balances at a given specific point in time. The primary purpose of the trial balance is to prove the mathematical equality of debits and credits after posting. The accounts are listed in the order in which they appear in the ledger. The order of the presentation in the trial balance should be assets, liabilities, stockholders' equities, revenues, and expenses. We want to ensure that all the debits equal credits because accidents can happen and something can be misposted both to a debit side or both to a credit side. It aids us in uncovering errors in journalizing and posting. If during the trial balance we find that something is not in the normal balance side, it leads us to investigate the different transactions that impacted that account. So we go back to the account ledger, we look at what happened, we trace back using those reference numbers to the general journal and look at the full impact of the transaction. And perhaps if things are muddy enough, we may end up going all the way back to source documentation to confirm the original general journal entry. We can find an error and then we enter into what we call a correcting journal entry in posting to fix the error and repost appropriately. The trial balance is very useful in the preparation of the financial statements. Remember, it's a list of accounts and accounts that have balances and what those balances are at a specific given point in time. With that, we can then begin the process of creating all of the different financial statements. Here's a sample of the Sierra Company or Corporation's trial balance on October 31st, 2017. Now you'll notice that debits equal credits. So we know that all of the journal entries had equal debits and credits, and everything was translated from the general journal to the posting to the ledger accounts correctly and appropriately. Doesn't mean the initial transaction was analyzed correctly, only that debits equal credits. There's some limitations to a trial balance. It's not going to tell us if a transaction is not journalized. If it was never journalized, it was never posted. So it is completely missing. There's no way to know that with the trial balance other than if you were aware that you purchased a piece of equipment and the equipment balance seems low. There's a lot of other things that come into accounting that are knowledge-based or things that you are aware that were experienced in a month. It might balance even if the correct journal entry wasn't posted. This one happens occasionally, and that's if a journal entry is posted twice. Some of our computerized accounting information systems are very helpful in that sometimes they will flag things that appear to be double entries. It will not tell us because it will balance if we have posted to the incorrect ledger accounts. And it will not tell us that there is an error in amounts posted, because it will balance as long as those errors are offsetting each other. Keep in mind, we're not perfect, even with the added element of computerized help in the accounting information system. There are two descriptors we use in accounting. An error is just something that happens unintentionally. There's no intent, there's no malice. It could be ethical or unethical, the error, depending upon the materiality and the scope of it. Whereas if somebody intentionally leaves out a journal entry or intentionally enters something incorrectly, that is an irregularity. It is absolutely intentional and is viewed as unethical, regardless of the situation. So a real quick review question, just on the broad category of a trial balance. When will a trial balance not balance? Is it if a correct journal entry is posted twice? If the purchase of supplies on account is debited to supplies and credited to cash? If a $100 cash dividend is debited to dividends account for $1,000 and then credited to cash for $100? Or is it when a $450 payment on account is debited to accounts payable for $45 and credited to cash for $45? Only one of these four will cause the trial balance not to balance. All four of these are some type of an error that can occur. Remember, the trial balance is the proving of the equality of debits and credits. Option C is the only one in which the debits and credits do not equal. So for do it number 5, which is represented in your text, they ask that we create and prepare a trial balance in good form. Remember, the accounts of the trial balance are going to be in good and normal order, starting with assets, moving to liabilities, stockholders' equity, revenues, and then expenses. So here's the basic blank format of a trial balance. Your assets are listed: current assets, plant, property, and equipment, long-term investments. So starting with our current assets and our most liquid asset, that would inherently be cash. So we provide it with its debit balance of $7,000. We then move to the next liquid asset. And looking at this account listing, that would be accounts receivable. That should convert to cash relatively quickly. These are amounts that customers or others owe us. So we represent accounts receivable at $4,000. Continuing to look at this list of accounts, we have the assets left of equipment and prepaid insurance. Equipment's going to be used over a long period of time and falls into the plant, property, and equipment section, or a longer term asset. Prepaid insurance is going to be consumed in the next year. That makes it a current asset, so it will be next in our list at the $6,000 debit balance, leaving our final asset of equipment at $88,000. We then move to the liability section. And what liabilities does this organization have? They have accounts payable, notes payable, salaries and wages payable. Remember that liabilities start with, the liability section of the balance sheet starts with the notes payable account. So we represent it at 19,000. It's always followed by accounts payable at 22,000, which leaves us finally with the salaries and wages payable of 2,000. Move through two sections of accounts. We're now on to stockholders' equity. Our stockholders' equity accounts that are represented in the listing only include common stock of 20,000, but we also have dividends of 8. A normal balance for a dividend account is 8, or is a normal balance for dividends is a debit balance because it's the reduction of stockholders' equity. We don't net them out at this point. I know we've talked about how when it goes over to the final trial balance, it's netted out of retained earnings. At this exact point, we are not there yet. So right now we're just saying out of all the activity, this is how it summarizes. We have service revenue of 95,000, utility expenses of 3, and salaries and wages expenses of 42. When I add all those debits up and all those credits up, they equal 158,000 respectively. We know that for the transactions that have been journalized and posted, that all debits equal credits. Doesn't mean that the trial balance is correct, but it does mean that our debits equal our credits.